What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be taking a look at Palantir stock because there has been a lot of excitement around this company lately. And what we are going to do in this video is we are going to take a look at who is buying this company and what is driving up the price and how that could potentially impact future returns from Palantir stock. So get ready for a video that is packed full of knowledge because we are going to go over also the S&P 500, what it takes to be included in the S&P 500, and what that could actually mean for the company moving forward. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As always, let's start off by taking a look at their stock chart. So the stock basically traded sideways here today, but we had a huge spike in the morning where the price went above $12.38. And then over the last 5 days, we could see that this company has been on an absolute tear. It is up over 26% in the last 5 trading days. Over the last month, up 43.68%. This is absolutely insane. And if we go from the bottom around here, we could see that that's actually closer to almost 60%. Over the last 6 months, the stock is up almost 63%. And when we look year to date, we can see that the company is up 83.26%. So absolutely insane movement out of this company. And for the first time in a long time, the stock is finally above its IPO price, trading at 27.28% above where it IPO'd at. And part of the reason the stock is trading up so much is that Cathie Wood is jumping in a major way. She purchased $43 million worth of Palantir stock. She purchased over 4.37 million shares of Palantir at an estimated valuation of $43 million. And this was across 2 of her flagship ETFs, the ARK Innovation ETF, as well as the ARK Next Generation Internet ETF. And this purchase comes after a very positive earnings announcement from Palantir, where they announced that their revenue increased 18% year over year to $525 million, which beat analyst expectations of $505.6 million in revenue. Along with these positive results, CEO Alex Karp came out with the following statement: "We now anticipate that we will remain profitable each quarter through the end of the year. In addition, for the first time in our history, we earned an operating profit last quarter. We generated $525 million in revenue for the first quarter, a result that surpasses our initial guidance and yet still understates the magnitude of the opportunity in front of us." The key point out of all of this statement is the fact that they are expecting to remain profitable each and every quarter from here through the end of the year. That is absolutely crucial for investors, because oftentimes you will see these companies where they will post one profitable quarter and then all of a sudden they will go back to unprofitability. Investors do not like to see that. They want to see consistent profitability, and they want to see that profitability growing over time. And that is what Alex Karp is talking about here. He's talking about a company that has found profitability and expects to remain profitable for the foreseeable future. And clearly Cathie Wood loved what Alex Karp had to say about the company moving forward, as she added a huge position to her ARK Innovation ETF, which is her top ETF. We can see here, if you go on their website, you can actually download their current holdings, and this was updated as of 5/19/2023, so up to date. And we can see that her top holding is Tesla. We also have Zoom as number 2, Roku is number 3, 4 is Coinbase, and then 5 is Block. From there, you start getting into some therapeutic and science kind of based companies. Personally, I think there's a lot of volatility in that industry, so I don't invest into it. You also do have a Shopify down here, a DraftKings, there's Roblox, and a few others, but you have to scroll down all the way to 23 before you get to Palantir, and this only makes up less than 1% of her portfolio. We can also see that there's around $57 million invested in Palantir, so the broad portion of this position was actually added in her most recent addition, that $43 million that she added on top of that. Before that, she had somewhere around $10 million to $15 million invested in Palantir. One thing a lot of investors are banking on with Palantir is their inclusion into the S&P 500. So what I want to go over here in this video as well is, what does it take to actually get included into the S&P 500? So what is the importance of being added to the S&P 500? Really what it comes down to is there are so many ETFs out there that try and track the S&P 500. You have VOO, you have SPY, and there are countless others. So when you get added to the S&P 500, basically what that does is that forces all of these ETFs that are trying to track to the S&P 500 to purchase shares of that company. So if Palantir were to be added to the index, then what that means is all of these ETFs need to go out and buy Palantir shares to kind of basically keep tracking to what the S&P 500 is. And obviously what that does is that adds additional buying pressure to a company, which thus drives up the stock price. The first first thing that's looked at before a company is added to the S&P 500 is what is their market cap. And generally speaking, what they look for is a market cap over $12 billion. And for Palantir, they're sitting over double this amount. They currently have a market cap of $24.8 billion. The second thing that matters for the S&P 500 is profitability. And this one is a very weird metric. So basically, you have to be profitable over the last 4 quarters and in the most recent quarter. And this Motley Fool article gives a very good example of how a company can kind of get around that. So basically, a company could be unprofitable over the first 3 quarters of the year. And in this example, they're saying that they are losing around $300 million for the first 3 quarters each quarter. And then in the 4th quarter, they hit a profitability of $950 million. So if you do the math here, right, 300 million times 3, that's $900 million that they lost over the first 3 quarters. And then in the 4th quarter, they were profitable by $950 million. So the 900 million obviously offsets, and they come out with a profit for the year of $50 million. So that in turn meets this criteria, right? They were profitable over the 4 quarters of the year because they came out with a profitability of $50 million, and they were profitable in the most recent quarter, which was $950 million. The next thing the S&P 500 is looking for is they are looking for companies that are basically public companies, and then they are looking for companies that have a large enough volume, a large enough liquidity that they can be traded in the market. So for the first one, they want to see a company that at least 50% of its stock is floating on exchanges. What that means is there can't be a founder, there can't be a couple co-founders that own over 50% of the company. If they are doing that, that company is basically a private company. It's not really that public to begin with. And the second thing is liquidity. So they want to see a trading volume that exceeds 100% of the float on an annual basis, as well as a minimum of 250,000 shares traded in the 6 months leading up to the valuation date. And Palantir easily hits both of those numbers. We could see that their average daily volume over the last 3 months is sitting around 43 million shares, and their float is sitting at 1.8 billion. When you do the math, you see that their volume on an annual basis is sitting around 10x what it needs to be compared to their float. Also, to be included in the S&P 500, you need to be a US based company, which basically means you need to trade on the New York Stock Exchange or the NASDAQ. You also can't be a business development company, a master limited partnership, or an LLC, so you have to basically be a REIT or an ordinary company. And then finally, at the end of the day, a committee looks at each company and decides whether it should be included in the S&P 500 or should not be included. And this is super important. They are looking to make sure that the S&P 500 is representative of the US stock market and that it really comprises of a large diversity of companies that make up the best companies in the US. So that is what the committee is ultimately looking for. And this again is important because there is so much money that is going into these ETFs, these S&P 500 funds. We have Vanguard alone has more than $400 billion in assets in the S&P 500. I wanted to leave off this video by pointing out something that I think is very important to keep in mind. And that is a lot of people often compare companies like Palantir to a company like Tesla. Tesla, a few years back, there were all this hype was going into the company, and then there was a lot of people talking about it being added to the S&P 500 and what that would really do for the company and for the stock price in the long term. And what we can see is Tesla was added into the S&P 500 on December 21st of 2020. So if we look at when Tesla was actually added to the S&P 500, it was trading around $230 per share. And if we compare that to where the stock is sitting at now, it is actually down over 22%. So what I want people to keep in mind is that just because a company gets added to the S&P 500, it does not mean that it is going to trade up in a straight line. Being added into these ETFs is often a good thing for the company for the long term, but in the short term, it does not mean that there is going to be this massive move up in the company, that the stock is going to shoot up, 10x, 2x, 3x. It's not going to happen. Buy into a company because you believe in the fundamentals for the long term, not because you believe that other people are going to be buying into it in the short term. That is also something that ends up getting priced into these companies that you often see, because you can see how much Tesla ran up leading into being inducted into the S&P 500, and then afterwards they fell off fairly quickly. Even though 2021 was a massive year for a lot of tech companies, they still had this dip throughout the summer. So at the end of the day, I do love Palantir. I like it for the long term. I think the most important thing here is to see them continue profitability and continue to grow profitability. At the end of the day, that is what is most important for stock price appreciation. We want to see companies that continue to grow their profitability profitability. It is great to see super investors like Cathie Wood and addition to the S&P 500. Those are short-term catalysts that will result in large price moves in the stock price. But at the end of the day, what ultimately drives stock appreciation is profitability and companies that continue to grow their profit. So do not buy a company just because some random person on YouTube talked about it. Do not buy a company just because it is being added to the S&P 500. Do not buy a company just because Cathie Wood purchased it. Make sure you are doing your own research and investing in companies that meet your time horizon as well as your risk tolerance. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.